maybe you don't understand what the value of a life insurance policy has right now. And perhaps that's why you think like, oh, it's morbid. We shouldn't put policies on kids. However, once you step through the process and really begin to understand why, it becomes a valuable asset for not just your child and potentially your grandchild who you haven't met yet. It is something that can be very valuable during the course of your entire lifetime.
Welcome to the WinEH podcast. This show is focused on empowering ranchers. Whether you're a seasoned rancher or just getting started, we'll guide you on how to use the infinite banking concept as an alternative way to finance your operations. It's a better way to think about money. Join us as we discuss planning for the future, attracting the next generation, and the art of keeping more money within the family. Here's your hosts, Winnie and Lacey.
Welcome. We are so glad that you are choosing to lean in with us today as we are going to dig into really frequently asked questions that we get.
Why do I need to put a policy on my kid?
Yeah, that is exactly how the question comes in. Why? Why do I need to do that? It's like defensively.
Yeah, because I think it's life insurance is seen as older people need life insurance. So why on earth would I put one on my kid? Most people ask that question.
And it's not just about being older. I think that there's almost like instant skepticism around it being an unethical thing to do. And some people will call it for what it is, completely unethical, seems wrong. Why would I want to put a life insurance policy on my child? And also, what does this have to do with our main basis for what we talk about each and every week around the infinite banking concepts? How do the two actually correlate? But I would say if we dived into the first part of the question about what should one consider and why you should consider it. I mean, if a person can take the time to really think about the last time, or if you have ever filled out a life insurance application. And I guess let's just circle back because we know this and we don't know what you know. So please excuse me if there are tons that you know about this, but there's a lot of people who actually don't. Not all life insurance is made equal. And certainly not all insurance is made equal. There's many different kinds. Some are beneficial and some are not. And we understand why there's a lot of skepticism in the marketplace around how insurance works and have a few things against it. However, I will say this. When we're just isolating life insurance in and of itself, there's some that you apply for right up front where you can qualify at the time of application. And then there's some that you qualify at the time of claim, right?
Two very different things.
Mm-hmm. It's like saying, okay, if I die and I had the kind of life insurance that was at the time of claim, then the person left behind, let's say it was you, Lacey, I pass away and then you're the person left behind. You actually have to go to the life insurance company and fill out the forms and hope that you'll get the death benefit because now you're actually filling out the application and I'm already gone and you're applying at the time of claim. And so it's basically a roll of the dice of whether you're going to actually get the death benefit or not. And there are typically a lot more conditions, I would say, around applying for life insurance at the time of claim rather than applying for life insurance at the time of application, where you have to do all the qualifying upfront. And however you answer the questions is about what has happened to you to date at the time of application. And so once you hopefully get a favorable response from the life company, and once you settle the policy by paying for it, as long as you weren't disclosing anything and as long as you're truthful about what your answers were until that time of application, then when it comes time for your family to make a death claim to receive the benefits, it's approved. It's automatically approved.
Yeah, the work is already done. Yeah.
Mm-hmm. Yeah. So why do this for your kids? Well, you could totally speak to the general nature of what is being asked on the application. So let's start there.
Yeah. So things that are asked on an application, your medical history, medications that you're on, injuries that have came diagnostic testing that's been done. So basically, they're looking at the whole medical picture and taking into consideration everything that may or may not have gone on since birth and considering the risk that they're taking on, because that's what they do. They take on the risk, right? So that's where you start.
Lifestyle.
That's right. Do hazardous activities if they're driving, because some kids have driver's license. What kind of drivers are they? Hopefully good ones.
Well, and it's generally like just what kind of hazardous sports are they into that could potentially impact the type of risk the life insurance, because life insurance companies' business model is risk management. They just want to know that, similarly to a bank, they just want to know that they're going to receive their annual or monthly payments for a while. Now, when you put a policy on a child, of course, the child cannot pay for the policy. It's the parents typically, or the grandparents, or an aunt or uncle under certain circumstances, right? Or a guardian under certain circumstances. So knowing what Lacey just covered is that in order to have a successful, be approved for life insurance application, it has nothing to do with whether you have money or not. In fact, what it has more to do with is if that person, whether child or adult, actually medically qualifies and lifestyle qualifies. Now, the reason why we shared that is to just give you some context that the earlier you do it, the easier it is. And the less potential stuff that could go wrong to have them be unqualified to get it in the first place. Because maybe you don't understand potentially what the value of a life insurance policy has right now. And perhaps that's why you think oh, it's morbid. We shouldn't put policies on kids. However, once you step through the process and really begin to understand why, it becomes a valuable asset for not just your child and potentially your grandchild who you haven't met yet, but it is something that can be very valuable during the course of your entire lifetime. However, again, the younger you are able to do it on your child, number one, it's very cost effective. You don't necessarily know when you always hope that your child is going to be healthy. That's what all parents want. We want our children to be healthy. There are just times that God has something different in mind, right? Like your child might be autistic or they become very sick.
Develop a condition, develop a disease. We don't have a crystal ball to say, if or when that's going to happen. So the sooner that you are being proactive and submitting applications for a policy for your kids, then you're securing that coverage for them. And that goes into, I think, the story you were going to tell, someone we know. And their child received a diagnosis sometime after the policy was put in place. And that family's very, very thankful that they have that policy on their child, because they wouldn't be able to know, because the life company would tell them no based on the diagnosis.
Yeah, or postpone it until they're of age. And here's another reason. Here's another point to make around why put a policy on your child is, let's just expand our thinking that a life policy can do more than one thing. Because I think in most people's mind, which is very confusing actually, which Nelson, our mentor, he always explained from being in the Forrester's world that a lot of financial products are mislabeled, and life insurance happens to be one of them, in the sense that most people just have it locked in their mind that life insurance is only good when someone dies. I can understand how it is very unappealing to think about that. And why most people think it's morbid is because it's like, oh, do we want our children to die? Is that what you're asking me to think about?
Or you putting a dollar amount on your child, right? And it's so not about, it's about so many things. It's not about putting a dollar amount on our child at all.
Yeah, it is about actually undoing what we currently know, what you may currently think about as life insurance, also death insurance. And that's, again, coming back to the labeling. Most people think that you only get some sort of value upon death. And the kind of insurance that we're talking about lives up to its name, its actual name, which is it's for the life, it's for living. You can use it while you are living. And actually the cherry on top just happens to be that upon your child's death, hopefully well into the future, after they've given you grandbabies or great grandbabies, that it'll actually impact your grandbabies, right? It actually has that potential. And as soon as you get a life insurance contract, a properly structured life insurance contract that Lacey and I could help you with, is that, sorry, shameless plug, and that you instantly create a generational legacy. Like you are automatically impacting not just your child, but your grandchildren that you haven't met yet. And just like that, it just happens just like that upon approval. And
well,
so
let's just tell a story of one of my kids. So we have a policy on all three of our kids. We're not going to ask you to do something that we're not willing to do. And so our son says, but that's my policy. And it just required a little bit of rewording and some education to him. But after Winnie explaining to him, yes, this policy, your life is the one that is insured. But what we hope happens is that our children outlive us. And upon our death, those policies are going to be passed to them, or sooner if we choose to do that. And then hopefully what happens is that policies then pass their kids. And after we explained the generational wealth, like I think Winnie did a great job of explaining to him what your parents have done here for you is truly a gift. And not only you're going to benefit from, but your children and your grandchildren. And after that, he was like, oh, well, that makes total sense why they did that. And so there's just so many reasons why.
So let me add to the list of reasons beyond how it can create instant generational wealth. And of course, this has to be partnered with a certain set of skills in terms of management of cash, is just the sheer fact that right now, what has been given to us for long-term planning, it has been a solution that was provided by the government, and they created a plan called the Registered Education Savings Plan. And it's an interesting dynamic in terms of to solve a particular issue of post-secondary schooling. Okay. When we think about it, that it solves for post-secondary education. What it doesn't solve for is the fact that we're parents for the rest of our lives. And there's actually other things that we're always going to need money for before they go to post-secondary school. Like I think about the hockey and all the things that every single parent has to go through in terms of supporting our children, like whatever activities that they end up choosing.
Well, and if we're speaking of farmers and ranchers, like people in the ag world, like rodeo's huge. 4-H cattle, like who's in 4-H? Who's in rodeo? Oh, there's so many things that agriculture kids can be involved in. And so those things cost money.
Gas, a lot of gas, miles and miles, right? And so let's think about all the number of things as parents, besides just, okay, let's save money for their education so they have money for education. What about how can you maximize all of those dollars that you're spending on your kids throughout their entire lifetime? Not just when we know we should, like as parents, when they're under our roof, but what about the fact that right now, I can't speak for the American landscape, but I can speak for the Canadian landscape. It's really expensive. Our real estate is really expensive. And so the chances of your kids staying home longer than what we did when we were growing up, it has exponentially increased. And I know there are some parents who would love that. Love that. They don't want to see their babies go anywhere. But, there's also parents where it's like, you know what? I cannot wait to get my independence back too. And it's not because they love their children any less, but that's just the way it is here. And then, of course, there's some cultures that it's just built into the culture that they live together for the rest of their life. And that's fine. It doesn't matter how that goes. But all the activities before they go to post-secondary, all the expenses that are going to be had that we want to be a part of, that we hope that we can do for our kids, whether that's down payment on a house, money for their wedding. Then if they choose to have babies, of course, we're going to spend money on grandbabies. Come on. We're going to want to spoil them rotten. And then there's all the other periphery stuff like camping and travel and life, right?
Let's just face it, there's always going to be something that needs to be
Yeah.
paid for or that we want to pay for.
Like I even forgot about cars, like cars, trucks, whatever. There's so many expenses that ultimately we will all have, opportunities, emergencies, and then just general life stuff. And we have to think about with every financial decision that we make, it's either going to allow us to have more money into our 60s, 70s, and 80s, or it's not. And so having a system in place, not just constantly reacting to all these purchases coming up. If you also think about and start looking into the power of being proactive versus the power of reacting. If you can get proactive about getting a system in place for all of your purchases for the rest of your life, it is going to matter. And this, getting a policy in your child, it competes with getting a registered education savings plan. Hands down, it has way less limitations, better tax advantages, a lot less risk, and it lasts a lifetime, not just for a moment in
That's
time.
right. Yeah, it sticks with them for life.
Right. And so honestly, I don't know if this is about why should we put a policy on kids? It should be more like,
Why not?
why not do
Why
this,
not?
right? Like if you really actually started writing down all the pros and cons of, a registered education savings plan and putting a whole life dividend paying insurance contract on them.
Yeah, I wrote
It's a
down,
no-brainer.
so I jotted down a list before we started, and that's just right off the top of my head. Sticks with them for life. You're locking in their medical insurability because based on how we structure the policies, locks in some insurability. You have control, not someone else. Generational wealth that we spoke of, you're creating that generational wealth. And heaven forbid your child passes before you, there is a death benefit. And we've had this conversation with people. Okay, how would that impact us? Would that death benefit allow you to take time off of work until you want to go back or feel like you can go back? Would that benefit allow you to pay for a memorial? I mean, there's so many things. And so that's another reason to do it. We never, as parents, we never want that to happen ever. But we've all seen it happen. And so just like you spoke to, Winnie, being proactive instead of reactive. And when we start talking about our children, we all get in their feels. So I guess we can end this with, why not put a policy on your kids?
Yeah, it's honestly an infinite amount of damn good reasons to do so. And we'll just leave it at that because I think it's good enough.
Bingo.
Bingo.
So, yeah. Please, we appreciate you. If you enjoyed this episode, please share it with someone that you know or love. Go ahead to our website, grab our books, rancherway.com, and please leave us some reviews on Apple or Spotify, comments on YouTube.
And hopefully about how lovely you are and how wonderful I am.
That's right.
Okay.
Cheers.
So glad you leaned in with us on the WinEH podcast. We truly hope you're feeling more informed and empowered to take another step towards optimizing your financial life. Right now, make sure you hit subscribe so you can keep growing and learning with us. Until next time, we wish you prosperity in every area of your life.